Hello and welcome to the Weekend Investing Daily Bite of 12th of December. A flattish day again, not much loss, but not going forward either. So, fourth day in a row, we are still stuck in some sort of a short range in the market. In the weekly discussion today in the Daily Bite, we will discuss about this new closing bell phenomena that SEBI is redefining. We will talk more about this in the second half of the video. This is going to alter how we determine closing prices in the market, and that has impact on a lot of passive funds. As always, do read the disclaimer, do subscribe to the channel, and click on the bell notification. Let's now look at the market. So fourth or fifth day rather in the market where we are in an inside bar. What is an inside bar is then when your daily bars are within the range of a larger bar, which was last Thursday. So almost a week has gone by and we are still consolidating after this rush up that we had. So as long as we are actually now challenging this breakout level of around 24,500. A dip below that will certainly take us towards this 24,200 mark. But I think this is now, coiling up for a move up potentially. Unless we break down from this level, I'll still remain hopeful for a move up. That's how this setup that I read. I could be totally wrong here as well. Nifty down 0.38% for the day. Nifty Junior also down 0.29%. So after running up for almost 15 sessions, there is some give up today at 0.29%. Nothing really major fall in that terms. Mid caps did have a 0.5% fall after many sessions of moving up. So there is some sort of a pressure at this level, and small caps as well moving down from this resistance line that we already got to, breaking down below 2 days of range. So 0.93% small caps had the biggest sort of cut. But I don't think we want to read too much into this and say that the trend has started down. Let's watch for a few more days and then decide where we are going. Bank Nifty also neither here nor there. We've now spent 4 days within the insides of Friday move, and Friday was inside of Thursday. So we have the entire week now within the Thursday bar, down by 0.33%. Not inconclusive either way, very dull and sideways kind of market, I would say. Advances were lower than declines, so the declines did have a slightly higher heavier hand in the markets than advances. So after 4 or 5 days, if the market is not picking up, some of the weak hands are getting shaky and they're giving up. In a day or two, unless we really rebound back hard, I think this weight market, may fall on its own weight, so as to say. In heat map today, very mixed bag, but largely, towards the red. Reliance down 1.2%, Coal India down 1.8%, ONGC 1.9%, Kotak Bank, State Bank of India, SBI Life down. You had good losses, good in the sense that fantastic losses in Hindustan Lever, ITC, Nestle, and Tata Consumers. You also had losses in NTPC, Tata Motors, Titan, Asian Paints, L&T, Trent. The list was very long. Gains were only there in Bharti Airtel to some extent, and you had gains in Tech Mahindra at 1.5%. TCS and Infosys also marginal gains, but not really. I mean, the kind of move that we had on the previous night on Nasdaq, that really did not translate into big wins for the IT stocks, which was expected. Adani stocks moved up as a group today. So the Fed secretary that is going to be replaced, that news has come through, and the investigation that was on was under that particular person, and that is going to change now. So that is giving some fillip to Adani stocks. Lodha doing well at 1.79%. Beyond that, there was Vedanta, Varun Beverages, LTIM with minor gains, but some of the stocks that have been running recently, Zomato and Motherson, ABB, they were taking a back seat as of today. So today was that day where bulls did hang on, but now they are sort of at that edge where one or two more such days and they will give up on this move. Sectoral trends, IT stocks moved up at 0.8%, and metals were up 0.3. Other than that, everything was down. FMCG is becoming a worrisome sector because it was down 1.1% today. It is now down 2.5 in the last week only, and 14.3% gone in the last 3 months. It has made only 4% in the last 12 months. There are many stocks in FMCG now which have made nothing over the last 4 5 years, and you know, uh, stocks like Dabur, stocks like Hindustan Levers, many such stocks are there which are now hurting. Public sector enterprise stocks, autos, PSU banks, energy, these sectors also lost ground. Energy has lost significant ground as well at 12.9% for the last 3 months. So, no major moves today, but most of the stocks, most of the sectors now in a downtrend. IT stocks up 0.7%. So you can see IT has been making newer highs. So always, whenever a stock or a sector or an index is making new highs, that is a clear-cut sign that it has no resistance, especially when it is at an all-time high. It is trying to go higher, and that is sort of the least riskiest point in my view in terms of projecting the next move. I mean, it has the least resistance to go up because there's nobody stuck beyond those prices. So if the move is there, if the momentum continues, that can really continue very, very hard. And IT stocks are leading all sectors in terms of going to newer highs, much ahead of the rest of the market. So now you can see how the sector rotation has happened while the overall market is still below all-time highs. Several sectors are below all-time highs, but IT has taken a lead and gone to a new all-time high, and hence is running much harder than other sectors. Coforge, Tech Mahindra, Persistent, LTI Mindtree, L&T Tech, some of the stocks that did well in the IT space. In the stock spotlight, you had Chalet Hotels, which shot up 9.7%. This has been a rising star from 2020 COVID bottom. It had reached 100 rupees, but now from there in 5 years, it has come up to 1,000. And after this consolidation of last 1 year, it seems to be breaking out on the higher side. So you can look for setups in Chalet Hotels. In the discussion today, we have the topic of, is SEBI redefining India's closing bell? So let's first see how the closing prices are arrived at. So whatever you see at 3:30, which is the market closing time. So the last transaction that happens is something that you see on the screen, at the end, but that is not the closing price. So first of all, you must understand that the closing price is a derived price. It is not the last traded price. The last traded price is just the last trade, and that has really no significance. So far, the way it has been calculated is that stock prices of the last 30 minutes of the market. So 3 o'clock till 3:30 is where this calculation is done. And this is a weighted average of the last 30 minutes. So weighted average is basically prices at which more trades are happening are given more weight than prices at which less trades are happening. And hence, while it is not an average, you're not taking a median, you are taking weighted average of the last 30 minutes of trade. So the most trades that will happen at that price will have more weight in the calculation, and that's how you will calculate it. So let's say there are three transactions in ABC Limited in the 3 to 3:30 period. One transaction happens at 100 rupees at 200 volume. One transaction happens at 101 with 300 volume, and one transaction happens at 110 with 500 volume. You'll take a weighted average of that. So VWAP is the weighted volume weighted average price, and you'll calculate it at 105.3. If you notice, it is not a simple average, it is not any median on mean, but it has been taken as per the transactions done. Now this is working rather all right, I would say. I mean, nobody really has a big problem with this kind of scenario, but there is potential that this can be misused. Lot of passive funds rely on stock closing prices to execute their trades. So, all the funds that are tracking an index, for instance, let's say a Nifty ETF, is going to declare its end of the day NAV basis the closing price of the stocks it holds. Now, it can happen that, in a few stocks, somebody could manipulate basis a lot of, you can say, round tripping, or you buy and sell in the same entity from different terminals, for instance, or within different parties, and you try to influence the price to go away from where it was going to close. And that can then be used. Let's say, let me give you another example. So uh, while index misalignment is one thing, your index closing may be different from where the actual index is closing, or uh, the index calculation itself may get impacted due to that. There could be players who may say, okay, I'll buy significant number of, let's say, options on a particular uh, stock which is in derivatives, and let's say it is the exercise or the last day of the option, and now basis the closing price, the calculations will be done on the options. Now, you could technically, in the last 1 or 2 minutes, do exceptional volume in those stocks at a price which is away from where the average was, and influence the closing price so that you make a lot of gains in the options. You could be holding a call option or a put option depending upon how you manipulate the market, but that potential is there that the option may get manipulated. So this misalignment can cause deviations between the fund returns and the indexes tracks, or this the kind of manipulation that I mentioned could happen. There could be tracking errors, where the fund performance and index performance could multiply. This error could multiply over time, and different people will have different sort of outcomes from this activity, and this could snowball. So passive funds are now running huge amounts of money, 11 lakh crores, and these tracking errors can get amplified, and even a very small tracking error on a very large sum of a fund can have a very large impact. So uh, and also Indian stocks are now in global indices, so even it is not just the Indian indices or Indian funds that may get impacted. This can impact global funds as well. Stock prices in the last 30 minutes can be very volatile on index rebalancing balancing days. So there is a change in MSCI index, and all the stocks have to change. Billions of dollars is coming in and going out, and that can really have an impact on those funds in terms of tracking error, whether they are able to very closely track the changes in the index. And SEBI has observed 1.5 times higher volatility in Nifty 50 stocks, and 3 times for larger MSCI during the last 30 minutes of trading. So there has been cases where extreme volatility has been observed, and that is why this methodology of closing auction session is being put into place. This is the solution. Now let's see whether this solution will live up to its name or not. So how will this solution work? So as soon as the market closes now, uh, a separate session will be held for 5 or 10 minutes, just like the opening session. If you notice, there is an opening session between 9 and 9:07 roughly, and buyers and sellers come together. They bid their buys and sells and the quantities, and then an algorithm runs at the end of 7-8 minutes and matches the buy and sell trades and comes out with a appropriate opening price. The same will happen for the closing price. Buyers and sellers will match their trades and submit their preferred stock prices and quantities. This matched price will become the closing price of the day to be applied to all stocks and hence to all indices. So this will sort of align with market sentiment. This will reduce tracking error, and last minute price distortions will not be able to materially deviate the VWAP price, or manipulate the VWAP price of the day. There is some chance of manipulation in the closing sessions also, but I think that learning will come over time, and because it will not be just a momentary flash of a price away from the normal. If somebody tries to jack up the price, there will be sellers who can bring them down as well during that session, and that will be more transparent and an open session. Now, example of this was in 2009, Hong Kong's closing session faced a major manipulation, and the last minute massive sell-off caused an artificial 10% price dip. So while this has not happened in India, there is precedence globally that uh, you know uh, the closing prices can be manipulated, and as a safeguard, in Hong Kong in 2016, the closing auction system was established, and capping prices movements to plus and minus 5%, and a phased implementation over the most liquid stocks, and then the next phase, and then the next phase, and so on and so forth. So SEBI might plan to roll out cash in a similar way, starting with the top 100, 150 stocks, and then going forth. And this is sort of an infrastructural or a systematic change that will happen. It can also help sometimes when somebody may have an open position, not able to close during the regular session, and in the closing session they may be able to close the positions also. So it will help brokers also who mandatorily close position, and in case on days due to some extreme volatility they are not able to close positions, these sessions can be used for that. So this is a sort of more of an informational daily bite today. What is the system in the market that is going to change? Do you think if this is better than VWAP? Do let me know in the comments, and do like and share these videos if you like the content, and subscribe to the channel if you haven't so far. I'll see you in the next one. Thank you. Bye.